Chapter 15, Other Taxes. The following forms and publications are used in the research and development of this lesson. Forms and publications are available at www.irs.gov. The primary forms utilized for this chapter are Schedule SE and Schedule H and several other forms. Publications used are included. At the end of this lesson, the student will have an understanding of additional taxes that a client may be liable for. Could include, and not limited to, self-employment tax, unreported tip income, excess Social Security, additional tax on IRAs, and Schedule H. Self-employment tax is calculated and reported on Schedule SE. It's how a sole proprietor pays their Social Security and Medicare payroll taxes. Because they are both the employer and the employee, therefore they are responsible for both halves of the tax. So you can imagine how business owners would really prefer that they have contract employees versus regular W-2 employees, because as a regular W-2 employee, the employee pays their half, which you can see under that chart equals 7.65% of income, and the employer pays the additional 7.65% based on income. The sole proprietor pays both, or a combined 15.3%. Now, it's important to understand that for 2011 and 2012, part of the President's stimulus program, everyone paid 2% less in Social Security. This was reflected in the Schedule SEs for those 2 years because it shows the total self-employment tax for sole proprietors at 13.3. You will see that increase as it has gone away with that stimulus plan in 2013. You, as a W-2 employee, have seen an increase in your withholding of Social Security by 2%. Now, it's kind of, and the news even made an issue of, increase the tax. It's just returning to what it was always before the stimulus plan of 2011 and 2012. Self-employment tax applies to earnings from self-employment of $400 or more. Self-employment income is reported on either Schedule C, Schedule F, or clergy and employees of churches and religious organizations. The net income amount is adjusted by multiplying it by 92.35%, and you'll notice the variance there is the half Social Security and Medicare, or 7.65%. This takes into account the portion that is a deductible business expense, and that 92.35 shows on the Schedule SE form. Form 4137 is used to figure any Social Security and Medicare tax that was not reported to the taxpayer's employer. For instance, tips. Tips received are supposed to be reported to the employer, and they are subject to Social Security and Medicare tax. All tips need to be reported to employer if over $20 per month. Many restaurants have their own way to track this, and it's taken out of their payroll, and all tips are put into a common pot. But not every place does that. So if the taxpayer does not report tips to their employer, they may be subject to a penalty equal to 50% of the Social Security and Medicare taxes owed. Unreported Social Security and Medicare tax, if it's uncollected, Form 8919 is to report and to calculate that tax on any wages earned that were not Social Security and Medicare tax collected. This form is filed when the employer did not withhold the correct amount of tax for the wages earned. If he over-reported it, if your W-2 shows more Social Security or Medicare tax withheld than what was supposed to be, then you need to go back to the employer to make the correction. He will resubmit a corrected W-2 to you and to the IRS. You don't deduct the excess amount on your tax preparation and on your tax returns. Taxpayer received Form W-2 and Form 1099 miscellaneous from the same employer. That happens when a bonus is paid out. Sometimes the employer will use a 1099 miscellaneous. And the income reported on Form 1099 miscellaneous is taxable under Social Security and Medicare. Now, there are instances where you may pay an additional tax on IRAs. We discussed this in previous chapters. You would use Form 5329 to report additional taxes on IRAs or other qualified retirement plans. Perhaps you have modified endowment contracts, Archer MSAs, or HSAs. Now, the additional tax, generally, you will get a client who perhaps as a 25-year-old needed to pull their money out of their 401k. And therefore they did so, which resulted in not only increase in taxable income, but also it also had a 10% additional tax and penalties. And that would be reported under these lines here of other taxes on the back of the 1040, the second page. So use Form 5329 for any of the following. Early distribution from a Roth IRA as well as a traditional IRA. Contributions exceed the maximum contribution limits and or did not meet the minimum required distribution. Another one you don't see very often when in regular tax preparation, and that is the household employment tax, or Schedule H. Schedule H applies to household workers, such as nannies, caretakers, housekeepers, domestic workers, drivers. Taxpayers may be required to pay and withhold employment taxes, such as Social Security and Medicare, if those wages exceed $1,800. Now, do you as the employer need to withhold federal income taxes? You're not required to unless the employee asks. And they ask by filling out Form W-4 and submitted, and then federal income taxes can be reported on Schedule H. Now, if you choose to do an extension to file or pay your own taxes, it doesn't apply to your household employment taxes that you have to pay. There is no extension to pay these taxes, even if an extension is filed for the personal return. Another tax, it's not technically a tax, but this is the place where you record it and pay it back, is the repayment for the first time home buyer credit, and you need to use Form 5405. So if you had purchased a residence in 2008 and qualified for the first time home buyer credit, then you may need to repay the credit, and probably have been. If the home was purchased prior to April 8th, 2008, you received a $7,500 interest-free loan to be repaid over a 15-year period. The annual repayment is $500 and is reported on line 59B of Form 1040. There are additional taxes, and there's a variety of minor little taxes that you need to be aware and continue to be aware of, and they all fall under line 60. Some of these are Form 8611 for recapture of low-income housing credit, Form 8834 qualified plug-in electric and electric vehicle credit. There are very specific instructions and vehicles that qualify. Form 8882 credit for employer-provided child care facilities and services. Form 8936 qualified plug-in electric drive motor vehicle credit. Form 4255 recapture of investment credit. How about Form 8889 health savings account? And there are others. All of them are rarely encountered and do require further research if you run across it. That concludes Chapter 15. Be sure to go online and go through the review questions and the TPAs. You need to pass with a 70% or better, and then read Chapter 16. Thank you.